We're back on Morning Trade Live. Dell is higher this morning after raising fourth quarter and annual revenue guidance as it continues to broaden its AI business. The company signed $12.3 billion in orders in the third quarter. Server and storage operating income growing 16% year over year. Shares are up more than 10% this year. Right now, we are trading almost 5% higher on Dell. So that is the focus of the morning trade. So joining us now for a closer look at this name is Schwab Network's host, Marley Kayden. And obviously, Marley, you and I were breaking these numbers as they came in, and what we saw was a bit of a mixed quarter, but investors seemingly willing to look past that because of what they've seen saying about the guidance. Also, as you and I had been discussing, perhaps a little bit more forgiving on a little bit more of an improvement there on the margin that people were expecting because of all these memory costs. Just talk us through what you're seeing as far as the market reaction and what the analysts are saying post-report.
Absolutely, Sam, and good morning to you. Like you said, we did see a bit of a mixed picture when the numbers came out. That revenue number was record-breaking, but it was in line with expectations. EPS was a beat, although this morning we're up more than 4.5%, likely because of some of those numbers that you just mentioned, that strong AI demand. So first, let's take a look at the numbers. They had their record-breaking third quarter revenue. It was up 11% to $27 billion, their highest quarterly revenue ever, but it was just in line with expectations. They did exceed on EPS $2.59 compared to expectations for $2.48. But the rally likely because of this raised full-year revenue guidance that was driven by demand for those AI servers. They're now projecting $25 billion in AI server sales for fiscal 2026. That represents growth of more than 150% and is $5 billion higher than their previous estimate. You also mentioned the margins, which we both know and talked about in advance of the earnings release, where analysts were watching for any deterioration there due to the rising cost of components in memory chips. But the company's gross margins came in at 21.1%. That was ahead of estimates. So analysts' response here. Melius Research put out a note saying this was supposed to be a disaster due to components. That's a direct quote. It wasn't, and Dell should be rewarded. That's what Mizuho is saying. They have a buy rating, a $200 price target in their note that they put out. And they argued that, quote, some relief is coming for Dell, which they say looks extremely cheap right now. We also saw a lot of price target adjustments in the wake of this report. We have Mizuho raising theirs to 175, like I just mentioned. Dell's price target at B of A up to 163 from 160. They maintained a buy rating. Also mentioning this fiscal year guidance and their early comments for fiscal year 27 reaffirmed their confidence in Dell because of this AI server demand. They expect long-term EPS growth of 15% over the next 5 years, which is in line with what the company's guiding. Morgan Stanley also raising their target up to 113 from 110. They have an underweight rating, though, on shares. They say that they acknowledge the memory cycle is unprecedented, but they spoke to seeing better preparedness from the company and guiding towards their fiscal year 27 EPS growth, which they said is well ahead of both the firm and the street's forecasts. So some questions there. We did also see UBS lower their price target. They lowered it from 186 down to 167, but they maintained that buy rating on strong AI demand. But they said they think commodity inflation could have some impact in fiscal 2027. Lastly, we saw Barclays lower their rating to 148 from 151, so not a significant drop. They keep an equal rate rating. But this note was interesting. They said that they reported their beat on higher gross margin despite those rising commodity costs, but they upped their estimates post-print but dropped their price target. So they are seeing, bullish sentiment here in Dell, just lowering that price target a bit, but still well above where they're trading right now, even up more than 4%, trading at 131.42 right now, Sam.
Yeah, and it's interesting as you sort of get us across some of the analyst notes and commentary this morning. It did very much seem heading into this report card that analysts had tried to get ahead, particularly of the margin story, on expectations that it could take a little bit of a hit from those rising memory costs. Now, we didn't really see a huge amount of that. In fact, we could perhaps take away from this report card some margin relief, maybe because of their inventories. Also, of course, because we did see that strong forecast as far as the AI servers is concerned. It was interesting because it was a bit of a similar story with Lenovo as well. They've actually been trying to get ahead of it too and playing it smart with building up some of the inventory there with respect to some of the memory too. But I'm just wondering, what else you're seeing out there as far as the reaction in the market, what some of the analysts are saying, because it felt like the pullback that we'd seen in Dell may have provided an opportunity to sort of step in here if they were going to say anything positive, which allowed this stock to see some upside.
Yeah, certainly, and we had seen a pullback. In just the last month, they were down more than 17%. So I think really the best quote I saw of all of them was from Melia saying this was supposed to be a disaster, and it wasn't. That was sort of the expectation. The expectations were low, and they came in better than expected, so they're being rewarded for that, which is, a story that we've seen. When the bar is low, there's a lot more forgiveness this earnings season.
Sure, that's totally right. And it's interesting because, as I mentioned earlier today, and as we were unpacking when we broke these numbers, it seems like investors are forgiving enough with the quarter because of how they're seeing the future. So that's certainly an interesting story to keep tabs on. Thank you so much, Marley. I'll speak to you later on. We like to keep promises here at the Schwab Network, and we did tell you that we would have an example trade for you. So what is it here for Dell? Charles, good morning.
Good morning, and happy Thanksgiving, everybody. I really loved how the earnings report played out. Guidance was really strong. Now, the stock isn't really reflecting that guidance overall, but, partly this is kind of the concerns that, the raised guidance may fall in line with the frothy projections that Oracle had. But overall, the stock is showing a lot of demand and a lot of strength. I like this pullback to this 132, 130 range. I was looking at the December 12th 136 strike. Now, the 136 strike isn't that liquid, so we could push that to the 137. I like the purchase of the contract at 350 or lower. I'd be risking no more than 50%. I believe that if it rolls under 128, it could start rolling a little bit more. But if it stays above this level, I like the upside target to be initially 139, but it could push as high as 146. So I like the upside target to be 50% as well, but I think that this could push around 125%, 150% return in the near term. This is looking overall really bullish. I really liked the overall analyst coverage as well. And again, the numbers just speak for themselves.
Yep, they certainly do. I mean, investors, as I said, are looking past what we saw in the quarter and very much hanging on to that outlook that they gave. That is a good look at Dell, an example trade for you. We're currently trading at 4.5% higher at 131 and change. Thank you so much for that, Charles Moon. You have a wonderful holiday. We'll catch you next time. Prosper Trading Academy.